This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And as always, welcome to the program. I'm Prashant, with me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning. After a long time, we can say that finally the bulls seem to have sort of tightened their grip on the market. It's going to be an interesting week after that, big move that we saw on Friday.
Well, that's right. Friday was a good start to September, right? It appeared the large caps say, why should only the mid-caps party? And they joined the party. I mean, big run is what we saw, and we ended strong as well.
Well, large cap bulls strengthened their grip, right? Mid caps and small cap bulls
they have been
were already,
anyway.
It's been a roll. The small cap index, by the way, I was looking at it last week. I think it gained 4.5% 1 week, right? It added 4.5% to what it's already done. So it's been going up for like 25 weeks or something. So it's just been absolutely crazy. Let's just quickly tell you what you need to know as we begin, a new trading session. So last week was a positive weekly close because of Friday largely. It was a positive weekly close. Friday was a, all gangbusters kind of day. Mid caps, small caps, large caps, everything participated after a long time. So after 5 straight negative closes, weekly closes, we had a positive weekly close, which is a positive indicator. Now, let's rewind back to US markets, right? Now, US markets had an indecisive kind of a close. The S&P, to be fair, was up about 0.18%, but the Nasdaq was actually absolutely flat. The big data point which markets were waiting for was the US jobs number, the monthly jobs number, which basically looked like a soft landing. What I mean by a soft landing, I mean soft landing for the economy, right? Not too hot, not too cold. Inflation looking like it's coming off without too much collateral damage on the economy side. That's soft landing for you, and the data kind of showed that. Unemployment rate, for example, just to kind of give you detail, that rose to 3.8%, which means that there is some slack in the labor market, which is beginning to show up, and average hourly earnings softened. Now, these are the two things which markets watch very carefully. So this is the jobs data. Before that, if you remember, we had the JOLTS employment number in the US, which also was soft. So you put those two things in together, and the case for a Fed hold later this month has gone up. In all likelihood, unless, of course, we get something else now, perhaps the Fed will be on hold. Views vary, though, I mean, what this really means. And it's interesting the way the market reacted. You would have thought that yields actually cooled off and the dollar perhaps takes a bit of a backseat, but none of that. The US 10-year actually went up about 7. The yield went up 7 basis points. It hit it closed at 4.18%. The dollar index rose to 104.24. So I was also a little perplexed, maybe because, in the very near term, both the dollar and yields had drifted lower after that earlier sharp spike. So there was a bit of a technical correction upwards. But I would be very surprised after the kind of numbers we've seen if these things go in a certain direction. The bigger worry for our market is actually oil. And I was making this point on Thursday and Friday as well. We are almost now we're actually closer to 90, right? We're almost at $88.5 a barrel, which I think is, which bears watching. Never good news when the biggest import goes up and shoots up like oil is doing at this point in time. Now, let's just come back and look at the levels, etc. So on Friday, the Nifty closed marginally above the 20-day moving average, which is at 19,422. We left off at 19,435. So almost there, 10 points basically. But we closed 10 points above the 20-day moving average. So first of all, of course, that is the first marker, the 20-day, which has to be, you stay above it. That's going to be great. But on the way up, the upper end of the falling channel is at 19,460. Again, not very far away, 35 points away, all in close proximity. And then the 61.8% retracement of the entire fall in the Nifty stands at 19,700. These are the three levels. I mean, that's the 19,700 is a more of an aspirational kind of level at this point as we start a new week. But the first two levels, the falling channel and the 20-day, are levels that you need to close above for confidence to come back, that maybe the market can do more. Support comes in at about 19,200. I mean, actually, for so much time now, we've been in a 300-point range, 19,200, 19,230 on the downside, and about 19,550 on the upside. So let's see if you're able to get this out. Now, on the bank Nifty, we need a close above the 40-day exponential average, which is at 44,513. By the way, on the bank Nifty also, we closed just around the 20-day moving average on Friday. Above the 40-day exponential on the bank Nifty, the retracements come. These are the same numbers I've been putting out for the last 3-4 days. So you basically have 44,985 and 45,312. These are retracement levels of the entire fall from the July high to the August low. And of course, support for the bank Nifty, which is held steady, has been 43,600, was not violated. So that still is pretty good, is a good number to go with. As I was saying, the small caps and mid caps is where the party has been. And it's not a party now, it's a rollicking party. 4.5% last week, just 5 trading sessions. So this is quite incredible. And at the margin, people like Nilesh Shah, who were with us from Kotak, etc., were starting to ask the question, at least right now, that, especially not mid caps so much, but mini caps and small caps, is the market, at least in the near term, overdoing it a little bit? And that's, I think, a question well worth asking. We will talk about this as the day goes on. Sonia.
Absolutely. I think you'll only know in hindsight, right? If the market is overdoing it in the mid caps and small caps. So wait for that fall perhaps. But up until now, things are okay. Overall, the market setup is looking very good, as Prashant was also pointing out. So just a couple of points that I want to add to that. The Nifty on Friday saw its biggest single-day gain in the last 2 months. So it's definitely covered a bit of ground. And post that, we had positive global cues. So you never know if the Nifty actually preempted the positive global cues that we had. Good run on Friday on the Dow Jones. It's been the best week since the month of July. And both FIIs and DIIs bought in the cash markets on Friday. So FIIs bought about 500 crores, DIIs almost 2,300 odd crores. The other positive thing for our markets is that the macro data has been quite supportive. So the 2 data points that I'm tracking, one is the manufacturing PMI that rose to a 3-month high. So clearly manufacturing is picking up, and this entire space, right, whether it's the capital goods names, whether it's infrastructure, all of these stocks have been one of the biggest gainers. The GST collections have risen about 11% as well, at just a little around 1.5 lakh crores, 1.6 lakh crores to be precise. So a couple of things to watch out for. The next big event that globally, market watchers will look at is the US Fed meet. That happens on the 19th and 20th of September. Any indication, of course, of a rate hike, perhaps any indication from the US Fed on the end of the rate hiking cycle is something that will be keenly watched out for as well. Then you have that surprise news that came out, from the Kotak Group. Uday Kotak will be resigning as CEO, and this is 4 months before his term ends. So that was a surprise. And Kotak Mahindra Bank, in any case, has been a big underperformer. So let's see if that overhang continues in the stock. And like, Prashant was also pointing out, a big overhang for our own markets is also what's happening with crude. Now up for 4 straight days at almost $90 a barrel. So that's another thing that perhaps could put the brakes on the market for a bit. But up until then, today looks like it's going to be a strong start. The implied opening is suggesting a 50-point up move.
Well, that's right, Sonia. 2 negatives, actually. One is the Brent crude prices, and the other factor is the monsoons. They are 2 risks. But otherwise, the screen looked very, very good on Friday. It was a good start to the September series. And it seems like the bulls said, why should the small caps have all the fun? And that's why you see how the large caps as well did pretty well. We had a good start, but now the bulls will eye on encore today, which will be very, very important. A follow-through session is something on the wish list. Now, besides that, we also saw some short covering on Friday's trading session. Both on the Nifty, the open interest was down by 5%. On the Nifty Bank as well, it was down by close to around 8.5% or thereabouts. What do the FIs do? Well, they continue to remain net long. Not too much movement out there in terms of positioning on index futures, but they're mildly net long. What was heartening, though, is that they wrote puts yet again, and they wrote close to around 3 puts for every 2 calls. In an uptrending market, you want to see put writing, and that's precisely what you saw. 19,300 put, 19,350 put. Between them, it added close to around 90 lakh shares. So it's a good amount of writing, and that's why we saw the PCR has moved to around 1.3 odd. What are the levels you're looking at? Well, we see resistance coming in at around the 19,560 odd mark and 19,620. I'm eyeing both these 2 levels in terms of resistance because there were some signs of writing at around the 19,500 call and the 19,600 call as well. So plugging in the premiums out there, you get the resistance zone. On the downside, we've gone to around the 19,220, 19,230, and we have bounced. So that becomes a crucial support zone. The Nifty Bank, that's going to play a vital role. It did participate in Friday's trading session, but now it has the 50 DMA to contend with. So today on a closing basis, you'd like it to conquer that 50 DMA. It'll brace itself up for a move towards the 45,500 odd. So those are the crucial levels, the 50 and the 100 DMA. The gift nifty suggesting a positive opening with a gain of close to around 40-50 points odd. Sustaining this gap is going to be very, very important. So we'll have to see a follow-through session today. Just one stock I'm looking at, Jio Financial Services. We know the Nifty 50 has been hosting 51 stocks because of the corporate action out there. Now the circuit has been flexed to around 20% from around 5%. So the probability of hitting a circuit is actually very, very low. So in the next couple of days, you'll see Jio Financial Services that will exit the Nifty, and we'll get back to having 50 stocks in the Nifty. So just thought I'll point that out.
Okay, very important observation there. But let's kickstart the show. Of course, Uday Kotak hanging his boots is going to be the topmost, thing to track through the course of the day. So more on that coming up with our experts in a bit. But in the meantime, let's also give you some cues. Andrew Holland, host of Citi, says that the very tight labour market is likely to keep the wage and price growth running at rates inconsistent with 2% inflation. Friday's jobs report makes a pause in September more likely, but he still expects a 25 basis points rate hike in November, with the Fed officials focused on keeping rates higher for longer.
Okay, we've got another view on equities coming in. This is Ridham Desai of Morgan Stanley. He says that voting in the world's biggest democratic election will likely commence in April of 2024, with the counting and the release of results to occur in a single day in late May. He's, of course, talking about elections here in India next year. This assumes that the election dates are not advanced, which is a possibility. In their base case, the equity market rises by 10% from now in the run-up to the May 2024 elections. Rhythm says, historically, the Indian market approaches elections with optimism. He expects it to follow a similar pattern this time around as well, that is pricing in a result that favors continuity in the government with the majority.
Okay, let's also get you a handle on what's happening in the money markets this morning. On the rupee, B. Prasanna of ICICI Bank says the economic activity data in the US is pointing towards a gradual softening of the economy. However, the dollar recovered from the initial sell-off post softer jobs data and remains strong. The rupee traded in a narrow range and was supported by the RBI's intervention. Is expected to trade in a range of 82.50 to 83 this week.
On bonds, we've got B. Prasanna saying that global markets witnessed softening buys and yields as growth continued to print below expectations, particularly in the Eurozone. Domestic yields followed suit and eased alongside improvement in systemic liquidity. He expects bond market to remain range-bound in the near term in the absence of major triggers. The 10-year benchmark bond yield is seen between 7.1 to 7.2% range.
All right, we got a lot of stock-specific action to track for you. Get to that in just a bit, but for the time being, let's run you through the top 10 list that we're tracking. We're looking at Kotak Mahindra Bank, Hero MotoCorp, Eicher Motors, IDFC First Bank, Five Star Business Finance, MOIL, GMR Power, RVNL, Biocon, and Shilpa Medicare. Well, all 10 of them expected to open in the green.
Okay, Ed Yardeni is with us, President Yardeni Research. Ed, good to have you with us here as always on the program. Thanks very much for your time. The jobs sort of data out of the US look like sort of consistent with the soft landing thesis. So that's good news. But what was but yields went up some 7-8 basis points. The 10-year dollar strengthened. What was that about?
Well, financial markets tend to look ahead, as you know, and I think the markets concluded that, it was good news, but now we must move forward and see what's next. And what's the big number that's coming up next is on September 13th, and that's the Consumer Price Index. So that'll be a very, very important number. And I think the market's starting to be concerned that we've had 2 great months on the inflation front, and we could have a setback perhaps in the September reading. And if so, that would incline the Fed to actually raise interest rates by a quarter point at the September 20th meeting. So I think it's just a cautionary move, concern that things might not go smoothly up ahead here after going very smoothly during the summer.
Ed, hi, good morning. So from the Fed, your expectation is that there could be a 25 basis points rate hike, and then what? Do you expect the Fed could indicate that this is the end of the rate hiking cycle?
I think it's all going to CPI number that comes out, and I'm inclined to think that it might be another good number, but I've seen something called trueflation, which is consistent with that view. And then there's the Cleveland Federal Reserve has an inflation nowcast that looks as though inflation might be running a little hotter in the uh, in the August number that we will get in September. So I'm inclined to think that the CPI will be reasonably moderate, and that the Fed will hold off for a meeting to see how the forthcoming indicators are going to play out.
Hi, good morning, Mr. Yardney. How do you expect the equity markets to behave, though, particularly emerging markets like India? We have had a good run. Earnings visibility is there.
Yeah.
But now a couple of problems are propping up because China is pushing in some stimulus. Monsoons out here not that great. Your view on the Indian markets?
Well, I think that all emerging markets are facing some issues with regards to the Fed. If the Fed keeps interest rates up here and bond yields are under some pressure to move a little higher, especially in emerging markets, that is not good for emerging markets, the stock markets, including India. And if the price of oil continues to go up for countries that import a lot of oil like India, again, that's a negative. Look, India's had a great move here. India's outlook remains very bright. I think India needs to do more on the infrastructure side, because I think that there are a lot of companies that do want to move out of China and move into India. But one of the basic problems is infrastructure, ports and roads and railroads. So I think there needs to be more spending there. But then again, it was good news that India was able to land it was a soft landing of a spaceship on the moon, and shows that India certainly has the technical prowess to accomplish great things. So I think, all in all, I expect India to kind of go sideways for a while, along with other emerging markets.
Okay, so India to go sideways along with other emerging markets. So in the pecking order, does it change for you, India's ranking compared to, say, markets like China for the rest of the year?
Well, there's the long term, the short term. In the short term, India has outperformed China because China's economy has stalled following the lifting of their lockdowns. And so it's been a disappointing first half of the year for China's economy and China's stock market. But now it looks as though the government is trying to provide some stimulus, and we won't really know whether that's going to work or not. I suspect it may not work as widely hoped. I think China's economic problems are much deeper and harder to solve just with another round of stimulus. But nonetheless, investors, I think, will view China, at least on a short-term trading basis, as an opportunity. And I think we've seen that in the copper prices, oil prices moving higher. The markets are getting set for sort of a risk-on view related to China.
But of course, I mean, Ed, slightly longer term, beyond the fixes the Chinese markets or the Chinese government is trying to make, etc. There is a strategic competition as well, right? I mean, the race for dominance and geopolitics and stuff like that. So, I mean, the United States and the policy towards China is going to be a little antagonistic. Would that be fair to assume?
Well, I think we have certainly a different geopolitical world for the past few years, in which there's much more tension, much more conflict between China and the Western world, but also between China and India in terms of just the competition for some global dominance. But none of these countries, none of these areas are going to be successful unless they have strong economies. And it's clear that the U.S. economy is very strong. And I think India has got a very good, strong economy. I think China has some real problems with their economy that are structural in nature.
Got it. Ed, great to speak with you as always. Thank you very much for your time, and thanks for joining us as always. We'll take a very quick commercial break here. Our list of top stocks to watch with our research team coming up next.
Welcome back. Well, we begin a brand new week, a brand new day, and looks like it's going to be a good start for the markets. That's what the SGX Nifty, or rather the GIFT Nifty, is suggesting. But let's get our entire team on board to talk about the big stocks in focus. I think Kotak Mahindra Bank definitely will be. So Abhishek is here to give us the latest on that. Abhishek.
Uday Kotak has resigned as the MD and CEO of Kotak Mahindra Bank. His term was to end in December 2023. So 4 months in advance, he has made his resignation. He'll take up the position of non-executive director for a period of 5 years. Mr. Deepak Gupta will be the interim MD and CEO until his own term ends up to December 2023. So Kotak Bank has sent 2 names for the post of MD and CEO to RBI for approval. Now, Uday Kotak says that the bank awaits RBI's approval for the proposed successor. Succession at Kotak Mahindra Bank has been foremost on his mind, and succession has been there since chairman, joint MD, all are set to retire by 31st December 2023. So keen to ensure smooth transition by sequencing these departures in an efficient manner. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Sonia, you're watching a few more auto sales numbers?
Yes, there was Eicher and there was Hero MotoCorp that reported. So let me start with Eicher. Very strong growth actually both in Royal Enfield as well as in the commercial vehicle segment for Eicher Motors. So if you look at it, Royal Enfield sales, double-digit growth there, and 11% growth is what we saw at 77,583 units is what they sold. Volvo Eicher as well, you know, the entire CV pack has picked up in a big way, of course, because of a pickup in infrastructure and the capex cycle, etc. So Volvo Eicher sales are up almost 30% year on year. But I also want to put on board what Royal Enfield has done in the past 5 months. The average, as you can see, there was a dip in July and April, but overall the average is above 75,000 in the last 5-6 months, which is great, and hence I'm expecting the stock to be in the green today. The other stock I'm looking at is Hero MotoCorp. They came out with their numbers as well, and it was not too bad. It was above what the street was estimating, and on a month-on-month basis, it was a good improvement that we saw. Total sales up 24% month-on-month, coming in at 4.88 lakh units. And if you look at it even year-on-year, right, total sales growth of 5.5% year-on-year, domestic sales growth of 4.8%, and export sales up 32%. The only niggling worry for Hero MotoCorp is its exposure to the rural markets, because of which, you know, there are, of course, deficient monsoons over there. So hence, I'm a little, cautious on that front. But today, you can expect the stock to be in the green.
Got that. Thanks a lot for that, Sonia. Going back to Abhishek, though. Abhishek, you're tracking a couple of large trades that took place on Friday. Run us through the list.
Well, Nigel, to begin with IDFC First Bank, Cloverdale has sold shares worth about 2,480 crores, which is approximately 59% of the holdings in block trade in Friday. So their holding has now declined to about 2.91% from the earlier 7.12%. GQG has bought shares worth about 1,527 crores, so they have now close to about 2.6% in the bank through this trade. Five Star Finance, HDFC Mutual Fund, has picked up about 1.4% stake in the company. Now, the sellers list includes TPG Asia, which has sold about 3.1% of their stake. Matrix Partners have sold about 3.06% of their stake. And Norwest Venture Partners have sold about 2.6% of their stake in the company. Back to you.
Okay, well, thanks very much, Abhishek, for that. So that is the blocks which have happened. Now, more stocks with news flow, which should be in focus. Vivek is here with that list. Vivek, morning.
Well, good morning. You know, the DISCOM activity in terms of awarding projects continues. First on our list is RVNL. The company, interestingly, has received a letter of acceptance from Madhya Gujarat Witch Company Limited. Now, this is for development of distribution infrastructure work, and the total project cost stands at 322 crore. GMR Power, now this particular stock will remain in focus. Quite a few order wins that the company has received, and these are from various UP DISCOMs. So the company's subsidiary arm that is, focused on installing smart metering projects has combined received orders worth over 5,100 crore. The first contract value is for the Prayagraj and Mirzapur circles, and the total contract is worth over 2,386 crore. And for the Varanasi and Azamgarh zone, the total contract value is over 2,700 crore. Further to this, the company says that they are also expecting a similar LOA for DVNL for the Agra as well as the Aligarh zone as well. And lastly on our list is MOIL, very strong production as well as sales numbers for the month of August. August production is at 1.23 lakh tons, up 53% on a year-on-year basis. And August sales stands at 1.11 lakh tons, which is more than double compared to last year.
Okay, thanks a lot for that. Well, let's go across to Ekta now. She has some more stocks that are in the news this morning. Ekta, over to you.
Thanks for that. Well, I'm watching two pharmaceutical stocks. I'll start with Biocon, which is going to be in focus on account of acquiring a manufacturing facility in the US for $7.7 million. It manufactures oral solid dosages. It is a plant which is located in New Jersey. It is expected to be positive news because the plant is US FDA approved. It will be the first plant they've acquired in the US, and the potential to expand their capacity will increase after acquisition of this plant. Shilpa Medicare, I expect that stock to be in the green as well. UK MHRA approval for a drug which is beta-histine dihydrochloride orodispersible films. This particular drug is used for vertigo, hearing loss, etc. Now it is important because these films, the kind of drug, it will allow compliance and ease of administration when it comes to patients. The approval is from the company's Karnataka plant, and it is the first approval for a prescription oral film product in a regulated market from this facility. So it will probably open the doors for more such complicated drug approvals, and it is the first company to receive the approval for the 24 mg version of the drug, and hence another positive coming in.
Okay, thanks a lot for that. So a lot of stocks in focus this morning, but here's a quick recap in case you missed out on any. Stocks with positive news flow: Kotak Mahindra Bank, Hero MotoCorp, Eicher Motors, IDFC First Bank, 5-Star Business Finance, MOIL, GMR Power, RVNL, Biocon and Shilpa Medicare. While no stocks with negative news flow this morning, but let's see how it goes. Plenty of them in the news. In fact, a lot of brokerages as well. So Surbhi is here to give us the latest on that. Surbhi, what do you have on your radar?
So I have a few interesting notes. The first one is on cement space from Jefferies. They say the price hikes announced for the month of September was in the range of 10 to 35 rupees per bag. For August, the prices were down 1 to 2% on a month-on-month basis and flat sequentially. So for Q2, they expect EBITDA could be a tad bit better than the initial expectations, and the EBITDA growth is likely to be led by stable prices in monsoon and the energy cost dip. The next one is by DAM Capital on Uno Minda. They have a buy rating with a target price of 705 rupees per share. They say the ongoing premiumization trend and the regulatory requirement would be the key drivers going forward. They expect a strong margin improvement from the second half of FY25 with better utilization and product mix. Expect the company to record a healthy 20% revenue compounded growth over the next 2 years, and they value the stock as 32.5 times FY25 EPS. And the last is on CLSA, last is on Bajaj Finance, which is written by CLSA. They have a buy rating with a target price of 9,000 rupees per share. They say the company is well poised on growth and profitability for the medium term. Personal loans doubled in 3 years, and it is being mispriced by the industry. They are well placed on the liability management for the foreseeable future as well.
All right. Thanks very much, Surbhi, for that. We'll take a quick commercial break here. We'll come back. Prakash Devan will be joining in with some specific stock conversation. We'll also have Shashank Srivastava, Senior Executive Officer, Marketing and Sales at Maruti, with us to discuss their August auto sales performance. Stay tuned.
Welcome back. Hope you're having a good morning. For starters, the gift nifty suggesting we open up in the green. Sustaining that gap is going to be very, very crucial. But we have a lot of stocks to discuss, and to help us out with some analysis, Prakash Diwan joins us to help us out. Hi, Prakash. Good morning. Well, let's talk about the top stock. I mean, an initial trade, it'll be in focus. Kotak Mahindra Bank. Mr. Uday Kotak, well, he's resigned. It was expected that by December we see some action, and that's happened. How do you view the stock from here on? The overhang doesn't completely go away, but at least there is some movement out there. One of those underperformers, your view on the stock? Okay, all right. I think Prakash, I'll be having a bit of an audio glitch out here. Prakash, I hope I'm audible now.
Yeah, I can hear you, Nigel. I can hear you.
All right, Prakash, I wanted your view on Kotak Mahindra Bank. The bank, in terms of stock price move, Kotak Mahindra Bank has been lagging a little bit along with HDFC Bank. But we have got news that Uday Kotak has resigned from MD and CEO position a little earlier than expected. December 2023 was, the deadline. How do you approach the stock from here on?
So I think, Nigel, very clearly, this is a move that is going to be recognized as a very proactive step to, look at succession planning in the bank at a very critical juncture where there are multiple key personnel who are, likely to be retiring towards the end of this calendar year. So my sense is people will start being able to plan out and anticipate the kind of growth that Kotak, with this, sheer strength of its balance sheet and norms that it has pursued, could start doing. So there will be some sort of an appetite that will build up. But of course, people will also want to see the plan, in terms of who's going to be coming in after Mr. Deepak Gupta also takes charge. So there's lots that will happen. But my sense is, the languishing of the stock, this was a big overhang. That's out of the way. So it kind of, at least has a clear trajectory to go forward and get re-rated upwards.
Okay, I think that's, that is correct. I mean, in the last 6 months, the stock has done nothing, right? Actually, in the last 2 years, if you map the trajectory, now perhaps this is the overhang that's out of the way. There's a proper succession plan in place, and the street can move ahead from this issue. The other question that I had for you was on auto sales, because we'll be talking to a lot of them right now. And the big takeaway is that, things have picked up, especially for some of these passenger vehicle makers. Any thoughts? What's your top pick here?
Good morning, Sonia. So I think I'm looking forward to your conversation with some of these OEMs because, it could probably herald or indicate some sort of a change in the demand side, which we've been struggling with some of these players have been seeing struggle. And the likes of Maruti, for instance, where, the very clear focus articulated for the SUV market share acquisition has started paying off, in spite of the fact that, they've just started about launching a lot of newer models. So my sense is the re-rating that's likely to happen in Maruti is going to be much sharper than M&M, which has already got re-rated. So you'll probably see a Tata Motors consolidate, M&M probably, keep on growing as the news flow comes in. But Maruti is a stock to watch out for. They're scaling up big time, and then very soon their production capacities will also start kind of coming up in a significant way for the export orientation to be much stronger than where it is. So I'm quite excited about that. And as a matter of disclosure, I've always had Maruti in my long-term portfolio. Key thing is going to be, monitorable is going to be how soon the demand motivates these people to take off whatever incentives or bonus or discounts that were there. At least hopefully they'll not come back in this festive season going forward.
Prakash, two pockets. One is oil is almost at $90, right? ONGC, if you have any thoughts. Oh, actually, it was up about 4-5% on Friday. Is there more here? And the second one is power. NTPC and BHEL, they've been doing fabulously.
So, Prashant, let me take the power thing first, because this is a pocket that's really kind of, rewarding a lot of patience that investors have demonstrated in the last couple of years. And even the likes of BHEL with the qualitative order flow that they're getting is likely to continue doing well. NTPC, of course, has its own share of strengths that's coming into the advantage. But, I keep on pointing out and nudging everybody to look at smaller companies here, which are yet to be recognized. So you have the likes of NLC on the power side. You probably have some of the equipment manufacturers also that you could dip into. But on very clearly on oil, I think there is a little bit of this concern that $88-90 to a barrel is going to start kind of, weighing down heavily on some of these sectors that have done well. But my sense is we'll probably be able to adjust to that because everybody is priced in that 85 to 90 zone. It's if we tend to be closer to 85 at some point later. But winters is always a tougher period for oil prices to cool off. Then you would probably start getting a bit worried. But I would definitely look at the likes of Engineers India Limited, which have a huge hydrocarbon order book, which is in the process of execution to benefit from this.
Sure. Okay, you were telling me a while back that you're looking forward to hear our discussion with the auto OEMs. So we have the management of Maruti now with us, Prakash. So I invite you to just listen in. We'll come back to you in a bit. Maruti's August sales performance was not bad at all. In fact, it was a record monthly sales that the company posted at 1.89 lakh units. Their domestic sales saw a healthy pickup while exports also surged 15%. Shashank Srivastava, who's the Senior Executive Officer at Maruti in the Marketing and Sales Division, joins us now to talk more about the performance. Mr. Srivastava, good morning. It was a good performance that you saw this time, a 14.5% growth. But as we head into the festive season, can you give us an overall sales picture? What are the big trends looking like for Maruti?
Let me first of all tell you about the month of August. So in the month of August, the industry sale was 360,900 almost. That's a growth of 9.7% over last year. So that's a very good growth. In fact, this month was the highest ever in the history of Indian auto industry. Not just the highest August, but highest any month. The previous highest being September 22 at around 355,000. So that was great month of August. Maruti also did well. We grew about 16.5%, 156,000 numbers against 134,000. So we grew much faster than the industry. As a result, we gained market share of almost 2.5%. Market share now just short of 43.5%. So it's been a good month, and cumulatively the industry has crossed the 1.7 million mark this year. So we are on track to getting up to levels of 4.1 million in this year. As regards Sonia, your question on the festive season. Festive season is started with in India starts with the Chingam month in Kerala, 17th August, ends with Bhai Dooj, which this year falls on the 14th of November. And this period generally sees a sale of around 23 to 26% of the overall annual sale. And by the calculation, it appears that we should cross the 1 million sale this festive season. So the beginning has been good. The owner has seen a retail growth in Kerala of almost 25%. So hopefully the trend will continue. We have seen good stable demand patterns in the demand parameters. So obviously we are looking forward to a good festive season, though we have certain factors which we need to watch out for, obviously, like the monsoon pattern and the inflation rates.
Well, Mr. Srivastava, exports have improved compared to what the company saw last year. It did roughly around 24,500 compared to around 21,500. The question is the worst of export slowdown behind us?
These monthly numbers may not paint the real picture, Sonia. As we discussed last time, there was some shipments that we missed in July end, which obviously got shifted to August. So those would have boosted the numbers. So month to month may not give a good picture. But cumulatively speaking, we are at the same level as last year. Although our projection still remains that by the end of the year, we should exceed the last year's number. Last year's number were pretty good, 259,000. So we are looking forward to exceeding that number this year as well.
Mr. Srivastava, in the domestic sort of market, the small car segment has seen a bit of a slowdown. Mini plus compact car segment has fallen to about 84,660 units compared to almost 94,000 same time last year. How are demand trends as you see them going forward in this space?
So you are right. Actually, while the last year saw a growth of 16% in this segment, but if you look at the longer trend, then the small car is about now 30.5% of the industry. Last year it was 34%. 5 years back, it was 45% of the industry. So yes, there has been a decline. Lastly, we believe because of the affordability factor, which means that the prices in this segment have gone up because of the regulatory stringency or because of commodity prices or because of road tax, registration tax, and so on. And the affordability factor has taken a hit, and that explains the decline. However, if you look at it in a more fundamental way, the demographics of our country support a first-time buying being very large. Around 45-47% has been the first-time buying in our country for the last 25 years. So in a growing economy, the transportation requirement will always increase. And in the absence of public transportation, then you would see, I would expect an uptick in the requirement for entry-level cars going forward. But obviously, it's very much dependent on the affordability factor. And that means that you will see an uptick should the general economy grow. And I'm so happy to see that the Indian economy in the last few quarters have been doing quite well. So I would expect with a small lag, this effect to come in the affordability factor for small cars, and then we can see it coming back. Although, in this year, our projection is flat, and it will be between 30 to 31% of the industry, so slightly lower than last year's of 34% of the industry.
Okay, that's an important observation that, the small car segment itself is reducing compared to the entire industry, now just 30% of the industry. But the SUV segment is doing spectacularly well, right? Your peers are also doing record sales in this space. Given it's doing so well for you, will it rise as a percentage of overall business? What is the market share at currently? And would this also mean that as the SUV sales rise, the blended margins will also go up in the quarters to come?
You are right, almost on all counts, Sonia, because yes, this segment has grown immensely. This August, the sale of SUV of the overall market was almost 48%, 49%. That's substantial. Even if you accumulate April to August, is still about 47.5%, which is pretty large considering that it was just 25, 26% 3-4 years back. So there has been a very good growth. And in fact, it had been one of our weak areas. And we have mentioned that in our earlier discussions. Our market share last year was just 12% in this segment, which obviously when a segment like this grows and you have a lower market share, it will impact your market share negatively. But I'm very happy that with the introduction of 4 new models in this segment, we have introduced the new Brezza, the Grand Vitara, the Fronx, and the Jimny, as also the Invicto. We have our market share has increased. In fact, we have become the number 1 SUV manufacturer now. You mentioned about M&M's record sale, about 37,000 SUVs. This month, we did about 42,000 SUVs. And on a cumulative basis also now we've become the number 1 SUV manufacturer. And we are happy because we have taken that objective to be number 1 by the end of this year. So we are glad that we could manage it in August by August itself. Hopefully we'll continue this trend in the remaining months and keep up to be number 1 in the SUV space as well. Surely it's going to help our overall market share.
Okay, that's great to hear. You are now the number 1 SUV manufacturer in India, and SUVs have grown substantially. The entire segment, which was just about 29% of the overall industry a few years ago, is now contributing almost 50% to the overall passenger vehicle industry. Thanks a lot for joining in, sir. Thanks for speaking to us on the channel. We'll do one thing. We'll take a quick commercial break. On the other side of the break, we have a whole market to trade today. So Anuj will be joining in for trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts.
Okay, welcome back. You're with us here on Bazaar Morning Call. There's 15 minutes to go for the pre-open session. Anuj is here with a quick check on the trade setup. Anuj, morning.
Morning, Prashant. Well, I was in Delhi over the weekend, and one question that I asked everyone was that what led to that big rally on Friday? And the answer that I got was that it was largely on account of, or entirely on account of market sniffing early polls, the general election that is. You know that the government has made a committee to look at one nation, one election. So if the general election is preponed, because you can't postpone the assembly elections. So if general elections are preponed, then it perhaps is start of a pre-election rally. And if that is the case, then it will have legs. And that will be led by mainly domestic-facing stocks or domestic cyclicals. That's just one theory. Of course, there's no way of knowing whether that exactly was the reason. So last Thursday's low of 19,223 now becomes your sacrosanct level. If you're long in the market, that becomes your stop loss. For today, of course, there are some interesting cues lined up. Dollar index is above 104. Brent is approaching 90. I think that's perhaps the only risk that I see for the market right now. So the US market is closed, so it could be a bit of a field day for domestic traders here. Also, the market's seen time correction of 1 month, but is not ready for price correction yet. That's visible on the screen. Kotak Bank, I think today would be important to see. Let's see how the stock reacts, actually, frankly, instead of preempting. And there will be an impact on the bank nifty, of course, which showed some life on Friday. Coming to levels, on the nifty, we closed at the 20 and 50-day moving average. So that ballpark is your support range to work with. On the option side, 19,340. That's your support number. And, of course, the bigger support is 19,223, last series low. On the upside, the resistance comes in at 19,550, the previous breakdown zone, and also 19,625, which is options-based. On the bank nifty, again, you want to see how Kotak moves. But apart from that, the first support is 44,346, the 20-day moving average. And the bigger support is at 44,200, not 43,200. I wrote that by mistake. 44,200, the previous breakout zone.
Okay, Anuj, thanks a lot for that. So that is how Dalal Street is set up for today. So let's, pose these questions to our guests in a bit. But I think the big story of the day and in the last 48 hours has been that surprise move that came in from Uday Kotak. He decided to step down as the managing director and the CEO of Kotak Mahindra Bank. And of course, as this was known, but he decided to do it 4 months before his term ended. My colleague Shireen spoke to him about his decision to resign earlier than expected. Listen in to what he had to say.
The bank is required by the Reserve Bank to have 3 senior positions step down no later than 31st of December, which is the chairman, managing director, and the joint managing director. So we are all in what is called the transition phase as per the regulatory guidelines. And since all 3 of us were supposed to be going out before 31st December, I felt it appropriate that we sequence the transition. And therefore, I took the decision and went to the board with my resignation. And the board has accepted my resignation, at the same time has appointed Mr. Deepak Gupta in the interim as the managing director and CEO, subject to RBI approval. Mr. Deepak Gupta's term also ends on 31st December. I see the strength of our management team, the depth of our institution as quite outstanding. And I'm very confident that the institution, Kotak Mahindra Bank, which I'm also very proud, is a majority Indian-owned institution. The one is the point of sequencing and transition. We think it is important that we sequence and transition.
All right, interesting chat out there, but a lot more stocks we need to discuss. So let's get back to Prakash Diwan. Prakash, we have Jio Financial Services that will be in focus. The stock has been listed for the last 10 days or so. But this week will be important, particularly from today. It goes out of T to T. It was in that 5% circuit band. Now it's going to be moving to 20%. Your view on the stock at around 240. It listed at more than 260, went down to around 210. But from there, it's bounced a goodish bit as well.
Absolutely. I think the setup has been fairly, restrictive for the real price discovery in this particular name. What's going to happen is once it gets out of T to T, it will probably be more freely traded, and which means that the price discovery will follow from here on, and that could be much higher than even what it got listed at, because I know for sure there is a lot of pent up demand from HNIs and PMSs would like to kind of add to this name given the fact that everything around in that ecosystem, if you look at, is getting re-rated upwards. And there is this whole bullishness in the financial services space, which probably hasn't translated into some of the prices on the stock. So JFS could definitely be one of the key beneficiaries of that re-rating. And that financialization, going to the last mile, a clear articulation of plans, all of that will probably be milestones that will get it closer to a much superior price discovery. My sense is it would probably tend towards the 300 mark in the next couple of months as plans get much more clearer, Nigel. So that probably is going to be the beginning today for that move to happen.
Prakash, any thoughts on GMM Pfaudler? It went up 6% on Friday, and that's the first big move we've seen after that big block happened. The overhang was off, and that day also the stock sort of swung some 10-15% and finally ended higher, if you remember. But there are many investors who like this name and say the market's good, there's leader and established player, etc. So maybe there's money to be made here. But your thoughts, GMM?
So I honestly don't have any specific input on what triggered that move on Friday. And I'm sure the news flow will probably validate some of that move. But essentially, this space is something which, as I said, we've seen no new capacities come up, but the demand side has been very robust, given how chemicals and pharmaceuticals have actually done in terms of capability enhancement. If you look at, some of them are still struggling, some pockets you might still have pricing issues, especially the ones that are export focused. But the underlying industry, is definitely something which is getting very, very robust. And then there are just a couple of players in that space who have that kind of a reliability or reputation. So it's probably going to be benefiting from that. But I'm not a big fan of this sector at this point in time, Prashant, for the simple reason it's very lumpy in terms of earnings and growth. So there are these phases where you have consolidation which goes on for a couple of years, and then kind of certainly you have these sparks. I would rather look at a capital goods space at this point in time, given how the government is looking at expanding all of its expenditure in the next 6 months. So this could probably be a bit sideways at times also.
Okay, all right, Prakash, just stay on. We have about 10 minutes to go before the pre-opening rates kick in. So let's get some technical views on board as well. Mitesh Thakkar and Sudarshan Sukhani are with us. Gentlemen, morning to both of you. Sudarshan, let me start with you. After the big move that we saw on Friday, do you think there could be some more follow-on buying? And if yes, what are the stocks that we should be looking at today?
Well, there should be follow-on buying. All of last week, I have suggested that 19,300 is coming and emerging as some kind of support, and we should be buying on dips. Now, Sonia, you've been in the market for so long. Just because there is support emerging or visible, the market doesn't have to go up almost immediately. It'll take its time. It did that on Friday. The trade is still to buy on dips and shallow dips. Don't even wait for large dips in the Nifty. Stay long and we'll see where we go. But the trade is to be long in the Nifty. The Bank Nifty is also in the same position, but it's far more choppier and volatile. So you should look for sharp, deep dips in the Bank Nifty and shallow dips in the Nifty to buy. To answer your question about the stocks, the first is Bajaj Finserv. It had a big correction. That correction seems to be over. A bullish pattern is in the making. Buy with a stop under 1470. Canfin Homes has now been dribbling sideways after a big decline on the back of news. That's a buying opportunity. It does suggest that the trading range should break on the upside. So buy with a stop under 730. Zydus Life is my only intraday short. The stock is, after a very big rally, it's giving signs of distribution and a pause. Intraday short with a stop above 630. And LTTS, which is now another mid-cap ID stock, having a big run-up. That run-up should continue. Buy it with a stop under 4370.
Okay, all right. Thanks a lot for that, Sudarshan. Let's hop across to Mitesh. Mitesh, what's your view? How do you trade the index?
Morning, Nigel. Last couple of weeks I've maintained a sideways consolidating kind of an attitude or view on the index. I think on Friday, I had some first signals that the consolidation might be coming to an end and the index might start some kind of an upmove. With that, I think, very clearly the bias has shifted to the long side unless until we start trading below 19,230, which was Friday's low, 19,200, which is the gap level. So let's take 19,200 as the reversal point. Having said that, the first target which I would look at in the near term is 19,470-550 zone. But I think that 19,680-700 gap should be retested again. And then the market may even move higher from there. So with that, we are clearly now turning gears to the long side, and I would suggest trading on the long side aggressively. Every dip should be buying opportunity till we break 19,200. And even on the stock side, I have all 4 buy calls today. The first one is LTIM, which is a buy with a stop at 52.40 for targets of 54.50. India Cement is a buy with a stop at 254 for targets of 275. I also have a buy on Gas Authority, recommended stop of 118 and a short-term target of 130 here. And National Aluminum is a buy with a stop at 96 for a target of 104.
All right, we'll do one thing. We'll take a quick break. Thanks, gentlemen, for joining us and giving us those ideas. When we come back, we'll have the pre-opening rates. We'll also have Rakesh Arora of GoIndiaStocks.com to put focus on the metal space. Stay tuned. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Let's talk about the metal space. But in the meantime, let's also get some F&O ideas going. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, hi, good morning, and thanks for joining in. Your thoughts on how to approach the markets, not just today, but this week. Do you think we could be trending upwards? And if yes, what are the individual stocks to look at?
Good morning, Sonia. Thanks for having me. So, in the last series, the Nifty closed with losses of around 2%. And after the strong run-up of last 4 series, this time we were down. If I look at the total open interest, that's shaded by around 20%. And now the total OI is near to 10 million shares for Nifty. Rollover is near to 77-78%. So some long liquidation were seen, but supports are intact. So we believe that multiple supports are there and range-bound bias could be there and support-based movement could be there. We have noticed that market-wide positions, open interest were better. So that indicates that stock-specific action will be there in the market. Talking about Nifty levels, and as per the option regime, we believe that till it holds 19,200 marks, Bank Nifty has potential to head towards 19,600 to 650 kind of level. Now, looking at the Bank Nifty index, here also inline rollover, we have multiple support near to 43,750 to 44,000. And with this zone, Bank Nifty has potential to bounce towards 45,000 marks. Now, looking at the stock-wise, we have positive view on the selective defense name, and first trading idea is buy on BL. This stock has been making higher top, higher bottom. Long rollover with better roll cost indicate positive move could be there. Consolidation breakout of last 5-6 days also adding value to the stock for further 4 to 5% rally. So recommending to buy on BL with stop loss of 134 and stock can head towards 145 level. Second trading idea, there is buy on Axis Bank. Supports are intact. The stock is respecting to key moving average. We have noticed some put writing activity. Rollovers are in line with better roll cost. So indicating positive bias in the counter. So recommending to buy on Axis Bank with a stop loss of 970. And given the breakout and momentum, we are expecting it to head towards 1035 level. Last trading idea, there is buy on Polycap. Major trend is intact. 2 weeks back, the stock gave a breakout from its pole and flag patterns. Rollovers and activities are indicating on positive side. We have seen continuous higher tops, higher bottom on the weekly chart. So recommending to buy on Polycap as well with support of 5100 and stock has potential to rally towards 5400 marks.
Okay, all right, Chandan. Thanks so much for stopping by and filling us in with your calls. Wishing you a good day ahead. Well, let's turn our attention to the metal space. That's been shining. Metal prices as well have bounced on the back of hopes of Chinese stimulus. Domestically, we have seen price increases. And the hope is that the Chinese will export less amount of steel. All this bodes well for metals. Let's find out how do you approach this space. Rakesh Arora, founder GoIndiaStock.com, joins us on the show. Hi, Rakesh. Good morning. Thanks so much for joining in. Well, Rakesh, before we get to the Chinese stimulus part of it, over the weekend we have this news that Tata Steel and the UK government, after many, many quarters, finally it appears that a deal is something that they could crack. What's your view on the stock and your view on the deal itself? We're talking about around 500 million support from the UK government, 700 million is what Tata Steel will put in. Your view on it?
So, see, this is a location which is, historic in nature. The plants are like 30, 40 years old. and needs a replacement. And given the economics, Tata Steel was, not inclined to invest into this facility, and have been partly closing down some of the, ancillary units which are around this, main unit. So without the government support, this unit is not economically viable. See, in the overall scheme for Tata Steel, this is now getting immaterial. Tata Steel is becoming very big in India, and this capacity would be hardly like 2 to 3 million ton. So it doesn't really matter, and it's so it's positive, but it doesn't really matter in terms of whole scheme of it.
Got it. All right. So this unit quite small in the whole scheme of things for Tata Steel. Let's focus on the steel stocks first before we get to the non-ferrous. What's your view on these stocks, Rakesh? Would you be a buyer at current prices? Now, there are a couple of factors that are looking up. Steel prices, demand is quite strong. The poor monsoon may be boding well for some of these long steel products as well. Your view on the steel space, and which stock would be your top pick?
So, Nigel, there has been a little bit of a price hike in the long steel product. And this is kind of corroborated with, the sharp increase in volume for cement also in August. So we had a very decent, monsoon in July. But in August, there's been a little bit of a drought kind of situation, and that has allowed construction activity to pick up. Please note that we are into the pre-election year, and government is really pushing infrastructure projects for completion before the election dates are announced. So we have seen a little bit of pullback in rebar prices, but this is still lower than what it was in Q1. And at the same time, coking coal prices have also moved up, and iron ore prices have moved up. So I don't think margins have really moved for the steel companies. When I come to flat steel, steel prices are largely stable. And when I see, prices coming out of China, the export prices are still lower than what they were in Q1, and Q2 was even lower than Q1. So overall, prices, I don't see any, major reaction coming in. We would get into busy season from October, and prices, domestic premium, etc., do tend to go up. So beyond that, I don't really see too much of bullishness in steel.
Okay. Would you buy any of these companies, though? Any of these steel companies at current levels, or would you stay away? Or do you have a preference to the non-ferrous space?
So, Nigel, most of the steel stocks are trading at reasonably, good valuation. So they are trading above their median valuation. And we are into kind of a mid-cycle earnings zone. So I don't really see too much of an upside for these stocks. There could be some, company-specific, ideas which people can look at. But overall, I think we are into a neutral territory. But from a medium-term perspective, I think non-ferrous has a better chance because if this China stimulus does come through and we do see a pickup in investment in renewables in Europe and US, then non-ferrous side looks much more interesting. The inventory levels are so very low, so I would rather prefer non-ferrous over ferrous space at the moment.
So what do you play out there? Hindalco, the converter, Novelis's prospects could improve from here on. Vedanta, valuation-wise, is looking good, but the promoter entity, issue plagues them. And also, I wanted your view on Hindustan Copper. Valuation-wise, the stock at 160 rupees is very surprising. But clearly, the street has some positive view on copper and the way ahead as well.
So, see, the pure play aluminum is Nalco and Hindalco, and they are the preferred bet, I would say, as compared to Vedanta, which has, a lot more things going through. And it's difficult for investors to really figure out, how things will shape out eventually. Coming to Hindustan Copper, see, copper is in a sweet spot, and given the, thrust for non-renewable, investments, etc. But, as you rightly pointed out, even if we were to assume that Hindustan Copper would double its production, it's difficult to justify the valuation where it is trading. So, there's momentum, but, fundamentally it doesn't really make sense.
Rakesh, hi, morning, Prashant here. Slightly off-track question out of syllabus, but, we hear a lot about this rare earth and, the opportunity there and this competition between China and the US, and that's going to be the big thing because, it's rare, I guess. There's, I mean, things like uranium and, I mean, is there a structure for like an ETF or a product for investors to kind of get exposure to these things? Just out of curiosity, I mean, have you looked at that space?
So, Prashant, just to tell the viewers, it's 70% of investment into EVs, into renewable sector is happening in China only. So if they are sitting on that, this rare earth material, they are actually exporting the finished product, and that is really available to the rest of the market. So the only way to really play would be, look at auto stocks in China. I don't think there's any other way. Obviously, there are a few metal companies listed in Canada, etc., which investors can explore. But from Indian perspective, there's hardly anything which Indian companies can look at.
I see. All right. There's Nigel. There's GMDC, right?
GMDC. Yeah.
But that is again. I mean, but it's. I think there are issues there, and it's like separate at the government under government control.
We're waiting by for the fine print.
Fine print, and yeah, absolutely. Rakesh, thank you very much. Great to speak with you. Appreciate you joining in with that perspective, and it's always a pleasure. Well, 9-10 calls with. Okay, I think just a quick detour. The Nazara Tech news break, which Sonia got to us last Friday, is confirmed. Nazara Tech is going to issue shares to Nazara Tech to issue shares up to 100 crores to Kamath brothers. Sonia, why don't you take us through the details?
No, so I think, I mean, these are the details that they've put out is they will be issuing 14 lakh equity shares at 714 rupees a share to the Kamath brothers, and this is in their personal capacity. It's not through Zerodha.
Yeah.
So the plan that Nikhil Kamath had was to acquire 3.5% stake in total in Nazara Tech. He already had about 1% stake, and the plan was to acquire, 2.5% more stake. Eventually, he has an eye set on the gaming business, not just for Nazara Tech, but they're looking at a couple of other gaming companies as well. Nodwin Gaming is on their radar, a couple of companies abroad as well. So the larger theme really is that the youth of today will be sort of consuming more of gaming. And, hence, that's the broader theme. Of course, Nazara Tech has been doing exceptionally well. If you look at the stock price as well, 50% rise in the last 6 months. Their gaming esports business has been doing double-digit growth. So, yes, the story is confirmed. Nazara Tech. By the way, let's get some calls in as well. Sudarshan is with us. He's going to give us the 9-10 call. And Sudarshan, if you've tracked Nazara Tech, I mean, it's been a very strong run. But at 770, how are the charts looking?
I'm sorry, I don't track it.
Okay,
and my
that's fine.
9-10 call is Canfin Homes can be considered for buying with a stop under 730.
Okay, and what about you, Mitesh?
I go with the buy on Gas Authority. Keep a stop at about 118 and a target of 130 is very likely.
Okay, all right. Guys, thanks a lot for that. So those are the 9-10 calls coming through. Mangalam is also with us to give us today's Momentumizer stock of the day. Mangalam, over to you.
Well, for the Momentumizer stock, I've chosen Jyoti Labs because it was a big mover on Friday's trading session. In fact, all of last week, it saw some decent momentum. In this year itself, the stock is up almost 80-odd%. It's at a fresh record high. The company has been reporting good results over the last few quarters. We heard from the management as well, a rare commentary coming in out there. And if you notice, the EBITDA margins have jumped all the way from 10% all the way up to 17%. But the reason why the stock has some momentum is because the next 2 weeks are crucial from an analyst meet perspective. The company has informed the exchanges that they will meet investors in UK this week. That's September 6, 7 and 8. And then on September 12th, there will be some sell-side analysts that they'll be meeting as well. Philip is one of them that the management has lined up meetings with. And most importantly, on September 15th, they have a meeting with Nalanda. Now, Nalanda is extremely important in terms of a meeting, largely because they've been increasing their stake in the company all the way from 2.35% when their name first appeared as shareholders in March 2022 to about 6-odd%. So let's see what comes out of this meeting as well. And are there more funds chasing this company?
Okay, all right. Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us more about Kotak Mahindra Bank. Abhishek?
Well, Nigel, Uday Kotak has resigned as the MD and CEO of Kotak Mahindra Bank. His term was to end in December 2023. So it's 4 months ahead of schedule that he's placed his resignation. He'll take up the position of non-executive director for a period of 5 years. Mr. Deepak Gupta will be the interim MD and CEO of the bank up to December 2023. Kotak Bank has sent 2 names for the post of MD and and CEO to RBI. Now, Uday Kotak also says that the bank awaits RBI approval of the proposed successor. Succession at Kotak Mahindra Bank has been foremost on his mind. Succession has been there since the chairman himself and joint MD all are set to step down by the year end. They are keen to ensure smooth transition by sequencing these departures. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, I'm looking at a couple of cement stocks, namely Shree Cement as well. So first on the cement price increases, Jefferies has come out with a note and they're saying the sharpest price increase has been in East India, close to 35 rupees per bag. And they're saying that maybe in the next 10 days, we'll see another price increase in East India. Shree Cement, they have some exposure out there. Basically, they have North as well as East. Those are the two big markets. So because of that, the stock will be in focus. But Nomura, they have gone ahead. They have upgraded the stock to buy from reduce. They've also increased their target price to 28,700. The key reason is the multiple. Earlier, they were giving it around 13 times EVP and EBITDA. Now they've increased that to around 19 times. Why have they gone ahead and increased the multiple? Because cost optimization, stronger capacity growth is what they're focusing in, and also management change. They're considering these factors as structural, and that's why this will drive their earnings growth. Though they've not tinkered with their FY26 earnings outlook for now. They say that the company, yes, they'll maintain their cost leadership. That's something that the street is a little bit skeptical on, but they believe that will continue because of the exposure to green power will move up. Alternative fuels as well will move up, which will help in thermal, coal substitution. So they like that. And also they're saying they're setting up railway sidings at plants. That's what will help in saving freight costs. So put this together. Shree Cement is a stock you should be focusing on. Up close around 2%. The volume's not very great in pre-open.
Okay, let's see how that goes. A lot of cement stocks in focus. By the way, let's head into the market opening now. I think in about less than a minute, the market's going to open. And looks like it's going to be a strong opening. 90 points higher now on the index. The Midcap index also up about 185 odd points. So looks like it's going to be, advantage bulls this morning. Tata Steel, NTPC, ONGC are all up about 1 to 1.5%. And of course, many stocks that are in the news. You have Kotak Mahindra Bank on the Uday Kotak News. You have Nazara Tech on, Kamath companies investing, buying stake in Nazara Tech of around 2.5%. So that stock is now up almost 1.5% over there. So lots of stocks in focus this morning. In the broader markets as well, there have been plenty of stocks in the defense space, aerospace, etc. that are doing pretty well. So all eyes will be on that. There was buying both by FIs and DIIs and of course very positive global cues. All eyes will now be on the US Fed meet, but that happens later on, around the 19th and 20th of September. In the interim, it looks like, the bulls are on top. There's the first tick on the index, well in the green, Nifty at 19,512, so conquering that milestone, up about 70 odd points. The sensex is up almost 200 points, so very strong start. A good start to the markets, you'll have to say. The Midcap index is better, up 0.5%, 200 points in the green for the Midcap index. The stocks that are leading from the front is Tata Steel, Eicher Motors. We were telling you about how both Royal Enfield as well as the commercial vehicle piece has done very well this month. Eicher Motors in the green, the Adani Ports, JSW Steel, L&T, even Hero MotoCorp numbers were better than what the street was estimating. So that one is up over 1%. Apart from that, Hindalco, NTPC, HDFC Bank are a couple of other stocks that are in the green this morning. And M&M, that one has been hitting fresh record highs. So M&M up almost about 0.7%. On the downside, you have Bharti Airtel, that's down about 0.2%. ICICI Bank, BPCL, Tata Consumer Products, and Asian Paints, just a tad bit soft really on Asian Paints, absolutely flat. Infosys Britannia also just and flatted in, but otherwise, it's not a bad opening for the market at all. 19,500 is here. The advance decline ratio is well in favor of the advances as we speak, and plenty of stocks in the broader market. Jio Financial Services, by the way, is up almost 4% odd. So looking pretty good there, and lots more to talk about.
Well, that's right, Sonia. A lot of stocks moving around. RBNL, they've received a letter of acceptance from the Madhya Gujarat Vij company. So that stock is in focus. The project cost is close to around 322 crores. Street likes that. JMR Power, the company is updates on the smart metering e-tenders that were floated by the UP Discom, amounting close to around 5,000 crores approximately. So that one as well should come up for you on the screen. JMR Power. Besides that, even these, e-metering or smart meter players, whether it's Genius Power, whether it's HPL, both of them locked in upper circuit. You can't trade them in the first few minutes itself. GMR Power, by the way, is up close to around 19%. It's up, it's locked now, 20%. So big move out there. IDBI Bank as well is higher in today's trading session. Volume is very, very high, 7.5% higher out there. On the flip side, a few losers as well should come up for you on the screen. Just get a few of them up. You have Berger Paints is a little bit lower. Sun TV has a good run. Well, that's open with a cut of close to 100%. But otherwise, a very, very good start. The Nifty holding around that 19,500 odd mark. Prashant.
Well, it's interesting to note that IDBI is up, right?
Yeah, 7%.
After the buzz, of course, has been there. So we'll track this one. So 65 on IDBI as we speak. Well, let's just take a look at some of the stuff which is moving around. I mean, market breadth is pretty strong, out and out. Gainers far outnumbering declines. Rail stocks had a fantastic day last Friday, and they're following through, as Nigel was pointing out, RVNL, IRFC, etc. So big volumes and big gains. Emtar Tech did very well on last Thursday and Friday. It's up another 5% this morning. There is NMDC, I think we pointed out. RITES is up another 3% this morning. Idea has been crawling up. So 2.5% on Idea. Big volumes on that one to start the day. Nazara, we highlighted 3.5%. Look at Jayaprakash Associates. I mean, back to 12 rupees, right? 7%. I think last 4-5 days, stocks moved up 30-40%. Midhani is up 5%, 431 on Midhani. Again, only reading out stuff with volumes at this point. Gensol Engineering is up 4%, 4.25%, 2,000 rupees on Gensol. And HPL and Genus, of course, I mean, they continue to run higher without a break. So just incredible. In 2 months, Genus basically has moved up from 170 when the GIC deal happened to, close to 300 now. Okay, let's just look at some losers as well. EIH Hotels had a big move on Friday. I think it was part of Nimesh's chatter list as well. It's around 5% today, 258, 259. But I can't see anything else with large volumes with significant price move on the downside. Nothing. I mean, it's 0.5%, less than 1% across the board at this point in time. So that's the market for you. 70 points higher on the Nifty. 19,505 is where we stand at right now. Rahul Arora is CEO at Nirmal Bang Equities. He's with us here in our studios. Rahul, great to have you with us here. Thanks very much. Let's start with small caps. But what else, right? 4.5% last week, Friday to Friday. And the pace has picked up to almost a frenzy. Mm-hmm. What do you make of the move, and what are you really picking up when you talk about this at Nirmal Bang with your team? What's the feedback, General?
So first off, morning, and thank you for having me on the show, Prashant. I think the point is that the market was looking very top-heavy when it went close to 20,000. And you're seeing this in the spate of new IPOs, right? The kind of subscriptions that you're seeing. So I think at some level, the market is, for lack of a better term, bereft of ideas. So I think that's why you're finding a lot of the interest that's coming in at the lower end of the mid-cap and small-cap. This may continue. I think if you look at, let's take a case in point of ICICI Bank, right? If you take last 3 quarters results, they've actually beaten estimates quite comfortably, but the stock hasn't done that much. But as you rightly point out, the delta is coming at the bottom. I think, Prashant, what's likely to happen is with commodity prices coming in favor, I think the biggest earnings delta is going to come for some of these guys. So even when we look at some of our small cap companies under coverage, say between FY23 reported and FY25 projected, a lot of these earnings are projected to go up by anywhere between 50 to 100%.
Genus is a case in point. Genus did, I think, ₹1.50 in EPS in FY23, but FY25, I think they projected to do, almost 8-9 rupees.
Absolutely. I mean, there are so many of these, right? Another one that comes to mind is PowerMech, APA. There's so many of these that would probably have EPSs doubling between 23 and 25, and that were coming to you at, throwaway valuations. And I think the point here being, let's take a case in point of Eris Life Sciences. It's a stock that we track, that we really like. We're looking at almost a 35-40% earnings compounded. So I think in every sector, the valuations in small caps had reached levels where they were very attractive, and now they were supported with earnings growth. A lot of it mainly because of commodity prices coming in your favor. So I think you're going to land up in a situation where gross margins are going to expand. And if, like I said, between gross and the EBITDA level, if there's nothing that goes awry, the market's paying multiples for that. So I think large caps, that's why you're probably finding them struggling. And I just gave you one example. There are others as well. But I think this could land up being the flavor. The good part is NFOs are still coming, even at this level. Yeah. And that's where I think you're going to find a lot of the interest.
Okay, by the way, the stock of the moment is Nazara Tech. It's up almost about 4% right now. So just want to pull that up on the screen. And as we've told you earlier, Nazara Tech will be issuing almost 14 lakh equity shares to Nikhil Kamath's companies. And of course, that will be in their personal capacity. The stock is now up 4.5%. Rahul, hi, welcome to the show. You know, the bigger theme here is what the consumption patterns will look like for the next generation, right? And gaming clearly is one of them. Of course, Nazara is in the listed space. There are so many others in the ancillary space as well. But is this a story worth betting on despite the run-up that we've seen?
So I think consumption as a theme has changed, right? Pre-COVID, post-COVID. And I think the way people are consuming, even the consumables has changed. And you're seeing this in hotels, aviations, and a lot of other sectors. Unfortunately, when you look at sectors like gaming or allied sectors like, let's say, Delta Corp, there's not too much of a market representation there, right? So the trade tends to get crowded in these many stocks. Goes back to, say, when real estate listed a decade or 15 years back, you used to assign scarcity premiums. That's a term you had heard a lot back then. So I think these are probably beneficiaries of that. How big these could become, I don't know. I mean, if this is a US or China-like story, this could implode, right? But I don't know how big gaming can actually become in India as we speak today. Some of the others, in terms of sectors, when you talk about consumption, there I have no doubt whatsoever.
Like which ones do you still like despite the rally?
So I still think, okay, this may sound a little weird coming from me, but I still don't think we've scratched the surface on QSRs, because people talk about valuations. Just to give you a case in point, if you look at Domino's same-store sales growth in the US for the last 6 or 7 years, so we're talking a reasonable time. I think it's almost 30 quarters. The same-store sales growth trajectory will shock people. I don't think it's reported a negative SSSG for the last 30 quarters in the US. So if that market is not saturated, I don't know if you've even scratched the surface here. I think the takers that you have for hotels in India, the kind of rates, I just heard Prashant talking about EIH, right? I mean, you're getting into the peak period for hotels. You have a G20 in Delhi. Some of that delegation finds its way to Bombay, and then you're into a World Cup. So I think there's a lot of this, and obviously air travel is going to be extremely strong. So I think the next 3 to 6 months from a consumer discretionary standpoint is going to be extremely strong. But I think, Sonia, I'm not too sure about how big gaming can become. It's a fascinating space. I understand that. But maybe because it's probably the only listed play, that and Delta Corp, I think from time to time, if people want to play this, they'll probably keep coming back to this. So it becomes a crowded trade. But, we saw this with Dixon Technologies. It went from 1,500 to what, 25,000 and in one rally because nothing else was listed. But when people start having other options, that's when these stocks will really get tested for price.
Hi, Rahul. Good morning. The two themes that you spoke about, QSR as well as hotels, a couple of stocks that you'll like from there. I think Indian hotels, you'll played it well, but then I think you'll decided that enough is enough. I think it's time to check out. What's your view currently?
So I think, Nigel, it's probably not a bad time to start looking at Jubilant Foodworks. I think it's been one of the biggest underperformers in the market. I do understand in the last quarter, Amul also took some price hikes on milk. So there's probably, some concern on the way cheese prices are. But I think if they're able to sort of cut back a bit on their store openings, I think this is such a fantastic business in terms of cash generation. And it's been one of the underperformers for quite some time on a relative basis if you compare it to their other peers. I mean, there are only two or three very solid, profitable aggregate QSR players in India, Jubilant and Westlife being two of them. But I think because Westlife is, knocking at the doors of 1,000, I'd say probably on a relative basis, I think Jubilant Foodworks looks like an interesting play. The only caveat being that because we're looking at maybe a little bit of a slowdown over the next year or so, and I would like to see them pull back a bit on their store openings. On a relative valuation basis, I don't think there's too much to be made in hotels. I think Indian hotels at 400 plus. I think Q3 of this fiscal or Q4, the calendar, whichever way you want to look at it, is going to be the peak quarter for a very, very long time. I think from there, I think if people are going to extrapolate these numbers into FY 25, 26, I think there's going to be room for disappointment. But I think we could still look at playing Indigo. I think there's still enough and more room to be playing that stock, and I think there's still value to be had there. So I think if you were playing maybe Jubilant Foodworks at this price, maybe an EIH, if you wanted to play hotels and Indigo, that's probably the way I'd play. And I think the fourth is because we're entering a wedding season and Diwali and all that, I think Titan is just operating on a planet of its own. And maybe you could extend it to Trent. So I think if I was looking at 5 consumer discretionary names, these would probably be the 5 names I'd definitely be interested in.
No PVR?
I think, Prashant, from 1,200 to 1,700, I know you've had, Gadar do about 500 crores and some of the others like Oppenheimer, Barbie and some of the SRK movies, and there's one releasing this weekend. But the 52-week high is about 2,000, 2,100. So Can it take it out for sure? But I think most of the delta, like I was saying, is, it's moved up about 450, 500 bucks. So I think a lot of that probably is in the price. I mean, if you want to play consumption, right, let's take a look at two results that came out last week, P&G and Gillette. I mean, those were probably the two best results you had. And along with Polycab, I think those are probably the three best results of the season. The kind of margin expansion that both P&G and Gillette showed you, remarkable. I mean, it's... I think what was very interesting is when I saw the SBI Bank's presentation, and I don't know if a lot of people caught this, there was actually a section of what they're doing on female hygiene. In the SBI Bank's presentation, towards the end, there's actually a page on what they're doing in terms of, there are, I think, about 435 schools that they gave sanitary kits to. So I think P&G and Gillette is remarkable.
I think you spoke about P&G last time you were on the program as well. So
I think from the consumer pack, I think P&G is probably going to give you the highest earnings growth. I think 30-35% compounded for the next 2 years. That's partly because I think all the costs that they have that go into their business are going to come in their favor. So you're going to see almost a 700-800 basis point margin expansion that's going to lead to a 30% kind of earnings growth. So I think maybe more than PVR, this is probably what I would look at with slightly greater interest, so to speak.
This year it seems to be like the return of the laggards, right? Whether it is capital goods, whether it's power stocks, whether it's railway stocks. I mean, everything's come back in a big way. So in this space, whether it's BHELs of the world, RailTels, whatever, what is your pick of the pack that are, despite the rally, you like even now?
So I think if we keep it to more on the mid and small cap side, Sonia, I think Solar Industries is something that we would still like. I think it's a remarkable company. Higher 20s in terms of return ratios, almost an 18-20% EBITDA margin. And now their defense orders are starting to kick in a fairly material way. So I think that is one that comes top of mind. The other is, of course, Triveni Turbines, another stock that's done well. Obviously, they had that JV with General Electric for 0 to 30 megawatts. But I think even beyond that, what they have done is quite remarkable. And with biomass, sugar, cogen, and a lot of these other industries, a lot of these that are becoming hybrid industries, I think there's enough and more scope for Triveni Turbines to do well. I think if you look at the return ratios and margins of Solar and Triveni, they almost resemble a lot, maybe a mid-cap FMCG company, so to speak. And I was mentioning Power Mech projects a little earlier. It's in the erection testing and commissioning business, ETC as we would call it. I think even if you exclude the Adani order that they had got for almost $1 billion, I still think they'll probably compound their top line by 35-40% over the next couple of years. So again, not something that's coming to you at over 10 times valuation. And maybe a KEC International. So I think these are 3 or 4 names that come to mind in the mid and small cap space on the capital goods side that look fairly interesting to us even at this point in time. Order books are very strong in most of these companies. So if you look at order book to bill in most of these companies, they'd be between 2 to 3.5, which is amazing with the kind of cash flows and balance sheet profile they have.
Rahul, what about the tech space? You're a little bit cautious on it. Tech stocks, I mean, they seem to be ignoring any kind of bad news, and even companies that came out with bad numbers, those dips got bought into. Some of those stocks are 15-20% post bad numbers. Your view on it, I mean, the risks remain, but the street seems to be thinking otherwise.
So I think there are 2 or 3 things here, Nigel. I think post the Q1 results, there have been some very large deal announcements, right, that have come through. So that's one that's positive. Second is this much talked about US recession with the chatter which started in October last year has not seen fruition yet. In fact, if you look at Friday's numbers, construction spending, the non-farm payroll and the ISM manufacturing, all 3 beat expectations. Thursday, jobless claims beat expectations, and earlier in the week, pending home sales and new home sales beat expectations. These are the absolute freshest data points you're getting from the US in the last 1 week. So obviously, and the banking results were not too bad. I think most of the banking results in the US were reasonably good. So I think that impending slowdown was probably getting pushed back further and further. Will it come? I don't know. But I think there was a period of underperformance that technology stocks went into. But I think the point here, Nigel, is that, as I was making the point to Prashant earlier, if you're not able to buy banks, right, and if FMCG is probably, consumer staples is not going to give you a 10% kind of sustained growth, the only 2 other places in the market which are behemoths where you can park your money is Reliance and IT. So I think IT went through that period of consolidation. And I think even if I look at the downsides at our brokerage house, which Girish has printed, barring say an odd persistent or an emphasis here or there, the downsides on the large cap stocks for us are not very material. They'll be about 10 to 15%. So I think if you're a long-term investor, it's not a bad time to start nibbling into some of these names and building a portfolio around them.
Well, there's news at the bottom of the screen. This is sources to CNBC-TV18. The UP government may announce an increase in sugar state advised price, SAP. Basically, what the state, what sugar mills will have to pay for cane in the state of Uttar Pradesh, which is the largest sugar cane growing sugar sort of output state in the country. So this is negative for sugar companies. Now, how much, of course, is a question. But there was some chatter around this for a while, and this is now starting to finally show through. You will start to see, and we put out a piece on Friday basically looking at what, the government has been doing to control inflation on one side. But this, of course, is also to compensate farmers in a better way. Sugar, of course, is an extremely political commodity. And this is interesting as it starts to come through. As I said, negative at the margin, but how much, to what degree, etc., we will have to see. But this is source-based information, and we'll, I think, have Manisha join in to fill us in with more details as we go along. Any thoughts on this? And I wanted, apart from this, your thoughts on when we talk about consumer. Sula came to mind. I don't know if you've thought about, it kind of checks all the boxes in a sense, a lot of the boxes. Premium segment, niche market, low penetration levels, etc., etc. But any thoughts?
So while we don't officially track Sula, what I can tell you is that from a flows perspective and an interest perspective, there's a lot happening there. Okay. When I see some of the flows at our desk, and when we talk to people at when we discuss UNSP and UB, there's a lot of interest in Sula. The only point, Prashant, here is that wine as a sector or as a space in India, the market size is not that big. Right, compared to, say, whiskeys or vodka or beer, for that matter. So I think it's because, let's go back to the point Sonia was discussing on Nazara. It's the only play that you have for wines in India, but I think it's a remarkable company to do what they have done. Our preference would still be towards a United Spirits or a United Breweries on a red part, not just because we track it, but I think if you look at glass, barley costs, etc., they're now coming in favor. So most of these stocks in consumer, Prashant, I don't think they're going to be top-line stories. They're going to be margin expansion stories. Most of these will expand their margins between 300 to 500 basis points, and you'll probably get a 16-18% kind of earnings CAGR in most of them. But this looks very interesting as a space. If the size can become bigger, then it'll probably do well. On sugar, I think we're 8 months away from an election, so I'd probably leave it at that.
All right. Rahul, appreciate your thoughts here on CNBC TV18. Thanks a lot for joining us, and hope to see you in the studio more often. Thanks
Thank you for having me.
All right, well, let's get back to the markets now, which is, by the way, not looking too bad, up almost about 65 points. But one of the stocks of the moment definitely is Nazara Technologies, up 4.5% as we speak. This is a CNBC TV18 news break. Nazara Tech will be issuing 14 lakh equity shares to MS Kamath Associates, which is a partnership firm represented by the Kamath brothers, Nikhil and Nitin Kamath. We have Nikhil Kamath, the co-founder of Zerodha, who's joining in as well. Nikhil, thanks a lot for being with us. If you can just start by telling us what was the rationale behind this investment, and is it just done at this point, or do you plan to raise your stake further in the company?
Hi, Sonia. Good morning.
Morning.
Broadly, the thesis for me has been, especially in the younger generation, I think the feedback loop that interactive content provides is gaining a large amount of traction. I think this space, which is gaming and esports, will grow at a pace faster than old school content. So the only real listed player in India is Nazara, and they seem to have done an exceptional job under Nitish in kind of alleviating a lot of the issues they have faced in the last many years, and they seem set for growth, and we really like the sector. Yeah, but very likely I'm looking at this as a really long-term play and would love to engage with them more in the future, maybe increase and play the esport gaming thing through them.
So how much will your stake be in Nazara Tech now? How much was it earlier? How much have you raised it to? And eventually, I mean, when you talk about long term, what would your eventual game plan be?
So my larger bet is in 10 years from now, gaming will be a bigger part of the ecosystem than it is today. And the stake was about 1%. I think now it should be up to about 3.5%.
And you'd want to, Nikhil, hi, morning, Prashant here. You'd want to, hi, congratulations. You'd want to take it up, not like a aspirational number or anything, but you'd want a sort of meaningful stake here eventually?
I would presume so. Because Prashant, the rate of growth of gaming, especially in the 20 and below age category, is crazy. Across the world, not just in India. Unlike cricket and Bollywood and other mediums of content, which are one way essentially, where a user is pulling data but is not interacting with the data, I think the fact that a user can interact with the data and he's kind of like engaging with it so much more, I think that is a big use case for what the youth of today will want 5, 10, 15 years from now. For gaming and esports, the logic, I think, seems pretty clear across the world. And Nazara being the incumbent behemoth in India seems like a very logical place for me to have increased exposure.
Right. Would you, apart from, of course, the check that you write, but would you want to be involved in a more sort of, at a board level and stuff eventually? I mean, they'd be happy to have you, I imagine. Are there any possibilities for Zerodha and Nazara to kind of work together? Any synergies you see there? I mean, to bring to bear Zerodha's technological capabilities for Nazara in any way?
No, nothing at all. So this has nothing to do with Zerodha, really. Zerodha will not be investing into this. This is more of a personal investment for me. But I don't know about being on the board or being actively engaged, because even though I have a thesis on the sector, I don't particularly have an expertise that I presume will be useful to them. But I'd love to, learn more about this sector and kind of be in it for the long term, because I feel in a decade from today, the sector will hold a lot more relevance than it does today.
So, esports for Nazara, which is, I think, almost 50% of their revenues comes from the esports segment, that saw fabulous growth in the last year. I mean, in FY23, esports, the revenues were up almost 75%. Do you think this pace of growth is something that is sustainable, I mean, over the next couple of years, or could it even be better than that?
I would presume it's likely that it will continue to grow at a quick pace. If you look at other geographies outside of India, some of these gaming companies have become ridiculously large. An Indian incumbent which is doing all these innovative things around esports and gaming, I think has to be encouraged. And hopefully this Indian company one day will actually compete with these larger international players as well.
Okay. Nikhil, what is the size of the investment for you, this 3%?
In terms of money value?
Yes, money value.
I think it should be about 160 crores, if I'm not wrong.
Okay. Just to get a sense, you are an investor in many sort of startups and companies, and I mean, you're a very active investor. I mean, for viewers watching, since this is listed, many will kind of look at this and say, well, Nikhil Kamath is coming in. So would you describe this as one of many sort of investments you make across segments, across companies, both listed, unlisted, mostly unlisted? Is that the way to look at this?
Yeah, that would be the way to look at it. I have a bunch of different themes, Prashant. I think senior living is one, gaming, esports is one. We do a lot around consumption because we kind of have a broader thesis that consumption is set to go up in India. So in these sectors, we kind of keep investing, mostly private, less so public. But I think this fits into our portfolio really well.
Which are the other listed investments, Nikhil, apart from this?
There's a fair amount, Prashant. There's quite a few of them. We typically like to take minority stakes. By minority, I mean much lower than 5% even. But there are a whole host of companies.
Okay, I think we'll have to have another special interaction with you on that, right? On your several investments. I do know that you're interested in a lot of fintech companies. You're doing a lot in senior living, as you mentioned as well. We'll come to that later. Just one final question from my end on Nazara, because, the stock as we speak is up about 5%. So I'm sure our viewers would want to know more. And since you've had several talks with them and their management, you're convinced on that front. Nazara has been investing recently in some game developers abroad as well. There was an Israeli based game developer, Snacks Games, that they invested into. What else are they doing in the overseas market where you see, high growth potential?
Well, Sonia, I really shouldn't comment on that, but I think they have a bunch of really interesting things in the pipeline in that specific domain. But I think the onus would be on them to kind of announce it when they're done with the deal.
Sure. All right. We'll leave it at that, Nikhil. Appreciate your thoughts and, all the best with your investments. Thanks a lot for speaking to CNBC TV18.
Thank you.
Okay, that is the big breaking news of the moment. Nazara Technologies now up almost 5%. And billionaire investor brothers Nikhil Kamath and Nitin Kamath investing in the company. They've invested actually in many listed entities in small amounts, as he said, but gaming is a space that he's focusing on in a big way. But let's shift focus now to the auto space, where we have M&M is the stock on our radar. The company reported their numbers. Their auto sales for August were solid. It was a 25% rise that we saw. SUV sales are at a record high as well. Vijay Nakra, the president, automotive division at M&M, joins us now to talk about that. Mr. Nakra, good morning and thanks a lot for joining in on CNBC TV18. Very strong sales month after month. SUVs are doing phenomenally well for you. But just tell us, what kind of average monthly run rate are you looking to achieve over the next few months, given that A, you have the festive season upon us, and B, there's also this, lingering worry about the deficient monsoons that we have in August. Do you see that dampen demand in any way?
Sonia, thank you for having me on the show. So, robust performance for the month, and while we don't give a guidance going forward, what I would like to mention is that we've been talking about our capacity at about 39,000 per month for SUVs. And if you look at the month that we just closed, we were there in terms of delivering to our capacity to 99 or 100% of our capacity. In terms of going forward, the key thing is that, yes, while we've seen a little bit of disruption in the monsoon in the month of August, there is a view that September would be a lot better. But as we get into the festive season, we are getting in there with a lot of our supply. So there are three things, the supply chain issues, which we've managed well month on month. And, we've kind of worked around that to make sure as we get into the festive season, we take care of that one lever. The second one is capacity, which we spoke about. We already have that in place. The third one is demand. And on the demand front, we continue to have a very, very strong demand on all the brands, especially the blockbuster launches. We've had 700, Thar, Scorpio N, Scorpio Classic. So, we are getting into the festive season with close to 2.9 lakh booking pipeline on the SUV front. So we are pretty robust, we are pretty bullish as we get into the festive season.
We were just having a conversation with the management of Maruti, and they said that almost 50% of the industry now is SUV sales, and that's remarkable. I mean, they're doing a lot of work in this space as well. For your own business, given that SUVs is such a large portion now, how much do you think you can take it up to, say, over the next 1 to 2 years? What will the contribution from SUVs be to the overall business? And would this mean better blended margins for you? If yes, how much could they be?
So, firstly, on the volume going forward, I think we've put out there saying that we are well on track to getting our capacity for SUVs to 49,000 per month at the exit of Q4 of this financial year, and we are well on track to get on that. We also have 2 launches in the next calendar year of 2024. I'm not talking about F24, but calendar year 2024, where we have the 5-door Thar coming in, and we also have the mid-cycle enhancement of the XUV 300. There's a lot of excitement in store as we get into the next calendar year, be it new launches, increase in capacity. So I think all of that will play out in helping us get to the kind of volumes we want to do. And of course, we've always said profitable growth. Difficult to comment or give a guidance in terms of blended margin going forward. But if you looked at our Q1 results, we are back to F19 levels of margins. At the end of Q2 of F22, we had talked about a 3 percentage point improvement in margin, and we delivered that well before that. And we ended Q1 with a margin of 7.5% at PBT level. So I think the financials are strong. The focus is on profitable growth. Capacities are being enhanced. Supply chain is being catered to month on month, and the demand continues to be strong. Sonia, there's one more thing I wanted to talk about. While all this focus has largely been around SUVs, there is also the less than 3.5 ton segment, which is a very, very significant size of industry and even part of our portfolio, and both in terms of volume and profitability. And I'm very happy to even mention that we ended last month where we've crossed 50% share. We ended the month at a little over 50% share of the less than 3.5 ton segment. So, so from an overall volume perspective, both the small commercial vehicles, which is less than 3.5 ton, and SUVs both have a strong performance currently and going forward.
All right. Hi, sir. Good morning. Good to hear your thoughts on the space itself. I wanted to ask you about the electric XUV 400. What's the response out there? What are the learnings? I mean, are there more launches in the pipeline? If you could give us a rough idea about the monthly numbers, how do you see that panning out?
Yeah, so we've always said that the XUV 400 is our first EV launch, yes. And we've always said that we're going to approach it a little cautiously going forward. It's a different category. We want to make sure that we have the product absolutely right as we go in there. We had said at the launch, we had mentioned that we would want to deliver between 15 to 18,000 vehicles in the first 12 months. We are in the process of ramping up to get to that level, keeping a very close eye on product quality and delivery. There is a lot in store on the 400 front in terms of offerings to the customer, which we will bring out in the future. So we are on track in terms of delivering on the 400. I think the category itself is seeing a little bit of challenges going forward. And if you looked at August numbers, from an overall volume perspective, if you look at month on month, it didn't kind of grow the way one expected it to grow. And I think that's got a lot to do with, sometimes the disruption in the category or the expansion of the category happens when there is disruption of products that get launched. We have a very exciting offering, which we will launch starting December 2024. We put that out there that we have 5 products in store that we would be launching. And I think a lot of that will help in terms of expanding the category.
Right. Mr. Nankra, hi, good morning. Prashant here. Your passenger vehicle market share would be around 10.5% now, sir? How is that going to trend going forward? Would you be able to inch up? And where do you see in the next 6 months?
Prashant, that's what I kind of mentioned. I think demand is robust. Capacities are going to go up from 39,000 per month to 49,000 per month at the end of Q4. We've managed the supply chain reasonably well. I think that's still going to continue to be a challenge going forward for the next 12 months, especially given that most of the capacity being set up on the semiconductor side is non-auto grade semiconductor. So I think there would be some challenges on the supply chain side that we need to manage. With hopefully the monsoon playing out in September, we think as we get into the festive season, it should be pretty robust for us.
Leave it at that. Thanks a lot for joining us, and all the best. The monsoon season hasn't. There have been some roadblocks, but hopefully things will get better. Thanks for joining us. Well, let's do one thing. Berger Paints is now on our radar. Oil prices have been on the surge. Brent crude is nearing $90 a barrel. Also, as I said, the weak monsoon situation could be a factor which can impact demand. Abhijit Roy, the MD and CEO of the company, joins us now to discuss how the demand picture is shaping up. What are the growth expectations? Abhijit, thanks a lot for being with us. The same question to you. I mean, is the weakness in monsoon in the month of August, is it a deterrent for demand, or do you think demand has now become monsoon agnostic? And what are your thoughts on how things could shape up from here?
So in paint, monsoon does impact. It's the other way around, like in the sense that if it rains very heavily, then there is a problem because the exterior painting cannot happen at that point of time. So July got impacted a little bit because of that. August was a bit of an improvement from July. Looking forward to September, this time the Diwali is late, so the season picks up slightly late in this type of situation. So we are hoping that September will be much better.
All right. Hi, sir. Good morning. Give us a few numbers then. In the first quarter, your volume growth was around 13.5%. What's the outlook for the year? And also margins were, in the high teens. What's the broad range we should be looking at? Keeping in mind there is good demand. Keeping in mind also input costs have gone up a little bit.
So we are expecting, as I have mentioned earlier, that we'll end up with a double-digit growth by the end of the year. Second quarter will be slightly softer. Third quarter will be much more robust, and fourth quarter will be sort of moderate. So we will possibly be ending with a double-digit growth, both in volume and value terms. As far as the margin is concerned, I think margin had improved, as you would have seen in the first quarter. We are expecting it to be retained at those levels in second quarter because the prices keep fluctuating, a little bit. But overall, as of now, the raw material prices are fairly okay.
Just to Mr. Roy, morning, to come back to the point that you made earlier about rains, get that, right? It's the opposite. I mean, lower rains basically means, painting and go on. But, August was pretty bad, very bad. September, the forecast is not too good. What percentage of your kind of, sales are dependent on this cycle? I mean, loosely the agricultural kind of cycle, agricultural income in that sense. And what will happen if September also turns out to be poor?
So it is a significant portion, so it's not as if, we do need the rains, the agri income needs to go up. However, it is not so intensely dependent on it, but it is important that, the rain does happen and at the time which is in August and September, because if the season is bad, as far as the agri income is concerned, it will go down. That will impact in the future.
What percentage of your sales are dependent on this, loosely, ballpark? You said significant, but...
It is, but we haven't calculated it in that way, but it will be having an impact. Whenever we have seen that this happens, it tends to slow down in the rural areas a little bit. However, the urban and the second-tier towns, they continue. So that is why I said the impact is significant, but not as if it's debilitating or it will result in a significant, a very, very significant impact, but it will have an impact.
Okay. Two questions. One on market share. Currently, your market share is, I think, 20% plus, a little over 20%. Where do you plan to take that by the end of the year, or maybe by the end of 2 years if you have a longer term, target? And second, margins overall, do you think it could be lower for the industry structurally because of all the competition that is coming through? So on market share and on margins.
So to answer only the first question, the market share, we had clocked the highest, last quarter, and we hope that, that will be retained in the second quarter as well. And going forward, we expect that, we will be somewhere around this mark for the year. We expect that, incremental increases do happen, and we have been increasing our market share over the years. For the last, I would say 6-7 years, incrementally 0.3, 0.4, 0.5%, we have been increasing, and we have crossed the 20% mark. Now, coming to your question, which is the second part of it, is the margin, what will happen to it? I think the intensification of the competition is not visible as of now, in the immediate future. Till quarter 3, of course, there's nothing much happening. It's only in quarter 4 that some trials possibly might happen. The other companies are already there, and we are in the game. And in spite of that, we have been growing reasonably well. So I don't see this year being impacted in any significant way. We will have to see what happens next year.
Okay, all right. We will end the conversation on that note. We've run out of time, not out of questions, but we'll hope to chat with you at length later on. Thanks a lot for joining in. That's Berger Paints talking about the impact that the weak, deficient monsoons could have on demand and the way forward for the business. Let's slip into a quick break. On the other side, we'll have the management of Volvo Eicher, very strong commercial vehicle numbers. Vinod Agarwal of Volvo Eicher CV will be joining in to discuss their auto sales performance. Stay tuned. Welcome back. This is Corporate Radar, and we're going to talk to the management of Eicher Motors. That's the next corporate we're tracking today. Company registered a very strong growth both in their Royal Enfield and the commercial vehicle business in August. In fact, the commercial vehicle sales were up nearly 30% year on year. Does that talk more about the revival in the industry? We'll find out. Vinod Agarwal, MD and CEO of the company, joins us now to talk about that. He, of course, is the CEO of the commercial vehicle business. Mr. Agarwal, thanks a lot for being with us. It was a strong 30% growth this time. What led to that? Is it because of a low base of last year, or is demand genuinely picking up? And across which segments did you see the maximum traction this time?
I think it is fundamentally due to the industry doing very well, and we are continuing to do better than the industry in all the segments. If you look at the overall industry YTD growth now is around 5%, and we have grown on YTD basis by 12%. For the month, industry has grown by 20%, and we have grown by 29%. Now, if you break up into the segments, the heavy-duty trucks, the industry has grown by 20%, and we have grown by 50% in heavy-duty trucks. In light and medium-duty trucks, industry has grown by 12%, and we have grown by 30%. So overall, we are doing in all the segments better than the industry, and this growth in the industry is in spite of still a very, very, you can say, big decline in exports. Exports number are down significantly, but overall domestic industry is doing very well.
Okay, all right. Mr. Agarwal, hi, good morning, and good to hear that you're outgrowing the market. Give us a couple of details. Year to date, you've grown by around 12.2% till the month of August. For the year, what kind of a growth will you be looking at in comparison to what you delivered in FY23? And since you're growing at a faster clip than the industry, give us the updated market share numbers.
As far as the likely for the year is concerned, I think it is very difficult to predict. But overall, we are very positive about the industry because the economy is doing well. And of course, there are investments happening in infrastructure, which is leading the growth in the CV sector. And there are still a lot of replacements to happen. So therefore, overall, we are very, very positive about the industry growth. And we are expecting that the industry will continue to grow. And based on that, we are expecting that we will keep on growing faster than the industry based on our strong strategic initiatives.
Okay. What's the updated market share, sir?
As far as market shares are concerned, in heavy-duty trucks, we are now at 9%. Last year, we were at 8% YTD. And in light and medium-duty trucks, 5 to 18 ton, we are now at 33%, 33 plus. And last year, YTD, we were at 31%. And in buses, we are at 23%.
So, I have a couple of more questions. Okay, heavy duty, you said you were at 9% right now. I think you were 8.5% in Q1. So, hopefully, you'll get to double digits in the heavy duty segment. Are you looking at that double-digit market share in the heavy duty truck segment by, say, the end of this fiscal?
That's the plan. Let's see.
Okay. So, double-digit market share, that's the plan at least, in the heavy-duty truck segment. Can you tell us in terms of margins, is there scope to increase overall margins further? I mean, for the business, I think it's been in this range of 25-26%. But now that, the most segments are improving quite a bit, I think discounting has also come down. Is there scope to increase margins further?
Our EBITDA margins in Q1 were around 8%, and last year it was 6% in the commercial vehicle business. Of course, the margins in the Royal Enfield side are much higher. So we have improved the margins in the first quarter. Let's hope, based on the control in discounting, let's hope these margins should get better on.
So EBITDA margins in the commercial vehicle segment, you said you closed at 8% in Q1. What is your target by the end of the year? Double-digit margins in the CV space?
Normally, we don't talk of the specific numbers, but if the volume grows, we will also get the leveraging benefit. And if the discounts remain controlled, then we will see better margins. And in any case, inflation is right now stable. So therefore, we are not expecting costs to go up significantly.
All right, Mr. Agarwal, as you mentioned, when we started this conversation, that exports continue to be under pressure. Though on a year-on-year basis for August, it didn't degrow at least in double digits. Year to date, it's still down close to 40%. How do you see that shaping up? Do you think that exports for exports gradually you'll see a recovery from year on?
Exports of commercial vehicles out of India, it used to be around 5,000 units per month average. Now it is at 2,000 units per month. So that's the type of situation in the industry. And it is largely due to the South Asian countries, specifically Bangladesh, Nepal, and Sri Lanka. All these three markets where India had been very strong, these markets are down by 70% year on year. So therefore, it has significantly impacted the exports out of India. On the other hand, we had not been very strong in Middle East and African countries or Southeast Asian countries. So we have grown our shares in the Middle East, in African countries, but those markets are still very small. The large impact has come because of South Asian markets, Bangladesh and Nepal. Hopefully, the situation should get corrected there based on the steps that these countries are taking. But still, as of now, the stress is there.
Okay. All right, sir. Thanks a lot for being with us. Appreciate your thoughts here. That's Eicher Motors talking about the business and the pickup that we've seen in the commercial vehicle sales. They've seen a market share improvement across a lot of their key segments as well. Let's take a quick break. On the other side, Mitesh Thakkar will join in for some technical trades. Stay tuned.
Welcome back. Well, the markets have come off a little bit from the top, and the pain point continues to be the Nifty Bank. As we speak, that's moved into the red, and that's why the Nifty as well is struggling to hold on to that 19,500. Remember, today's session is very important. Friday was good, but Monday needs to be a good session for the bulls to gradually start that move back towards that 20,000 odd mark. Mitesh Thakkar joins us to give us a quick update at around 10 a.m. Hi, Mitesh. What do you make of the first hour of trade, and give us a couple of stock picks?
Well, there's some negativeness, from the higher levels, but I still believe that the trend is on the positive side. So 19,400 is the pivot which I'm watching. Unless that breaks, the view will be on an immediate basis will be positive. So in case you get declines, what you go towards today's low, 19,440, 435, enter with a stop below 19,400. Maybe take a 10-point lower stop on the support area. And I think on the upside, we could easily head towards 19,570, possibly 19,680, 700 zone can be tested as well. So I'm maintaining positive bias despite the fact that there is some selling from higher levels. On the stock side, I have a buy on Tata Steel. Keep a stop at about levels of 128. Look for targets of 140 here. And Pidilite is something which is on the negative side. So that's a sell with a stop at 25.10 for targets of 24.30.
All right. Well, let's do one thing. Let's take a quick commercial break on that note. On the other side of the break, it's our special segment. It's the economy. Lata will get chatting with Neeraj Gambhir of Axis Bank and Robert Sorkin of Citi to get a sense of the macros in India as well as what's happening in the US. Stay tuned.